All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about Marathon Digital, stock ticker MARA. This is my most requested video. They recently put out their third quarter financial reports, so I want to go through a lot of stuff in this video. We're going to talk about the company's operational performance. I want to talk about the company's stock performance. We're going to take a look at their October operational results. They issued their financial statements, so I want to take a look at their balance sheet, their income statement, some other stuff they disclosed in there. In addition to that, they have a bunch of press releases they put out subsequent to that. Also, there's a bunch of analysis that I've put together. And then lastly, I want to talk about their earnings call. So you can see there's an awful lot to go through. So I will put some chapters below. I'll try and get through this as fast as I can. Before I get started, I want to thank everybody. We recently reached 15,000 subscribers, so it's much appreciated. I want to set a like target of 500 likes on this video. You guys have been hitting a home run, smashing the like button. It's really helping the channel out a lot, and I appreciate it. So with all that said, let's get to Marathon Digital. As of the time that I'm making this video, Marathon was trading at around $9.18. That put them just over a $2 billion market cap. They're essentially tied with Riot for the largest market cap out of all the Bitcoin miners. Riot and Marathon are significantly larger in market cap than the rest of the Bitcoin miners. We'll take a look at that later. I want to start with their October operational reports, and then I'm going to work my way to the financial statements. They produced 1,202 Bitcoin. That brings them to 9,812 on the year. Okay, this is a quote from Fred Thiel, their CEO. In October, we increased our energized hash rate 1% to 19.2 exahash. Remember, they have 23.3 exahash standing by. They're just waiting to get the rest energized. So they increased to 19.2 exahash as the facility in Garden City, Texas, where we have 4.1 exahash of miners installed, began to come online. Once this facility is fully operational later this month, we will have surpassed our 23 exahash target and solidified Marathon as the largest publicly traded Bitcoin miner in North America. Okay, so I want to go to a few charts because I want to talk about that. Marathon's been in first place as far as Bitcoin mined in a month every single month all year this year. Then if we go to exahash, a lot of these companies have big growth plans, but Marathon has been the largest by exahash all year this year. They continue to be far and away the largest by exahash, and that is likely to continue for quite some time. Okay, the third way I want to look at this is Bitcoin hodled on the balance sheet. So once again, Marathon is by far in first place. As of September 30th, they had 13,726 Bitcoin. Okay, but that is only a part of the picture. So with that in mind, let's take a look at the rest of the picture for what's going on with Marathon. Third quarter 2023 financial results. The company recorded net income of $64.1 million or 35 cents per diluted share during the 3 months ended September 30th, 2023. That compares to a net loss of $75 million per share in the same period last year. Now, this is their actual income by GAAP measures, so this does agree to the financial statements, but I'm going to dig a little bit deeper, pull this apart, and show you guys why I think that a little more nuance needs to be added to this to really understand how they performed in the third quarter. Revenue was $97 million for the quarter, significantly above the third quarter of 2022. Revenue was $12 million. If you remember last summer, Marathon almost had to shut down their operations completely. They were moving out of their old facility into their new one. They had a lot of delays. 2022 was an unbelievably frustrating year for Marathon. I was frustrated. I think I was expressing a lot of investors' frustrations. 2023 has been a very different year. They have ramped up. They're starting to achieve all of the goals that they were talking about, and it's showing in their financial performance, and it's showing in their operational performance. Okay, third quarter 2023 production highlights. Bitcoin produced 3,490. You're going to see the same quarter last year was 616. I want to go to a chart and just show you exactly what's been going on for the last year, quarter by quarter. So you'll see a year ago in Q3 of 2022, this is when they were closing the Hardin facility and they had not yet really gotten their new facility online in Texas. So this is massive, massive improvement. So, and I do expect between now and the halving, every single quarter, they will probably increase this number. Okay, so let's go to the financial statements themselves. Let's take a look at the balance sheet. This is one of the strongest balance sheets in the business. I will be doing a video on where the Bitcoin price needs to be for Bitcoin miners to survive the halving. And I'm going to do that. Each Bitcoin miner obviously has a very different answer. So spoiler alert, before I even do that, the price of Bitcoin at the halving is totally irrelevant for Marathon. They will survive the halving regardless of the price of Bitcoin. Now, obviously, the higher the price, the better. But with this balance sheet, it really doesn't make any difference what the price of Bitcoin is at the halving. Now, if you're to talk about a year after the halving or 2 years after the halving, obviously, if you're not bullish on Bitcoin, this cash runway will only last for so long. But let's dig into the balance sheet, and I'm going to show you why. Of all the companies, this is one of the ones that really is not concerned about the halving. I will say that in the conference call, Fred Thiel, their CEO, actually made it quite clear that they have no concern about the halving at all. Okay, so current assets, they have over $100 million in liquid cash. They have maintained this almost every single quarter for quite some time now. So they seem to have 100 million plus on the balance sheet. In addition to that, they're showing digital assets at $286 million. So that is the book value of their Bitcoin. But remember, they have almost 14,000 Bitcoin. So on the balance sheet, they're showing $432 million of liquidity. In reality, we know that at Bitcoin's current prices, it's actually a couple of $100 million, even more than that. When you compare that to their current liabilities, and I like to look at current ratios, for those of you familiar with the channel, you'll know this is one of my most important numbers for the Bitcoin miners. So you're going to see current liabilities of $38 million against current assets of $432 million. This is more than a 10-to-1 current ratio, and that doesn't include the fact that there's over $200 million in unrealized gains in current assets. So like I said, this is an extremely, extremely strong balance sheet. Now, there is a major change that happened to this balance sheet this year. You're going to see they have notes payable of $325 million. That was $732 million. They converted $417 million of their convertible debt into equity. So by doing so, that was actually a big dilution event, a stock dilution event. However, it did greatly reduce their long-term debt. It increased their stockholders' equity to over $1 billion. So this is the first time that their equity is greater than their long-term debt. Even just at December 31st, the equity was $385 million. The long-term debt was $732 million. So the long-term debt was almost double the equity. Well, now the equity is almost triple the long-term debt. So I do think this is one of the main reasons they did this. They are looking to do a lot of joint ventures. We're going to talk about that more later. And I think they had to get their balance sheet in a place where it looked a lot healthier in order to attract some of these partners that they're looking for. I was not a big fan of this conversion. This debt was not due for another 3 years. 1% interest debt over the next 3 years with no principal due for over 3 years was extremely advantageous debt. Having said that, it does not present as well on a balance sheet. So with this conversion, this just further strengthens their balance sheet. So Marathon does seem to think that Bitcoin is going to struggle going into the halving. They're not worried about that. In fact, with this massive liquidity, they mentioned they think there's going to be a lot of opportunities, maybe for them to have some inorganic growth with some of the other smaller Bitcoin miners that are struggling, have some debt, and aren't going to make it through the halving, in their opinion. So they did specifically say that in the conference call, so we know that they're looking to do that. In fact, they said they've already been approached by several companies to begin negotiations and talk about the potential to be acquired by them. I want to go to a quote from the transcript of the conference call. So this is from Salman Khan. He is the chief financial officer. So in response to a question, he said, and you can see I've highlighted this in yellow, while we hope the Bitcoin price will act like previous halvings, the data shows us otherwise. Hope is never a good strategy. So this was just one of many things they said on the conference call where they tended to indicate they were very bearish on Bitcoin going into the halving. With the stronger balance sheet and reduced debt, it provides us options and ability to strategically act when other inefficient or undercapitalized miners may not be able to survive. So you can see they say right here all of these things. Okay, so having taken a look at their balance sheet, let's take a look at their income statement. You can see total revenue of $97.8 million. Total cost of revenue was $113 million, but it's important to understand $53 million of that is non-cash items, depreciation and amortization. General administrative expenses of $20 million. And then if we go further down, you're going to see interest expense of $2.5 million. I want to show you a schedule that I put together. This is my own calculation. So obviously this does not follow GAAP accounting. And of course, this is not financial advice, but all of these numbers do come directly from the financial statements that we're looking at. So if you take a look, this is how I try to take a look at these things. Total revenue, $97 million. Cost of revenue, this is their cash costs. That was $59.6 million. So again, that does not include depreciation. That leaves them a gross profit of $38 million. That's 39%. Their general administrative expenses were $20 million. But if you dig deeper, you'll see that they had stock-based compensation of about $5.5 million. So that is not a cash item. So by my quick calculation, net cash from operations was about $21 million. This is one of the ways that I try to look at whether or not a company is cash flow positive from operations. I know that there is a statement of cash flows, but there's an awful lot of other things in there that are non-reoccurring, really non-operating items that for accounting purposes do get counted as cash from operations. So to me, this is their direct operations. This is their Bitcoin mining operations, and they are cash flow positive $21 million in the quarter. So that's a very important number to me. This was a 39% gross profit margin, but remember, in Q3, Bitcoin averaged about $28,000 per coin. Bitcoin is now fluctuating between $8,000 to $10,000 more per coin just a month and a half later. So these numbers should get better, in my opinion, in the future. Now on the other side of this, I want to talk about the $64 million in net income. So you'll see net income, $64 million. I do think this is a little bit misleading. It is true, but I think it's worth pointing out inside of this number, when they did that debt conversion that we talked about, they converted $417 million of their debt to equity. As a result of that transaction, which was 100% a non-cash transaction, they got to realize an $82.6 million gain. So in this $64 million of net income, there's $82.6 million of non-cash gain from this one-time transaction. So while this did help the balance sheet look a lot better, it's also helping the income statement look a lot better, but I think it's important to understand that's a non-recurring item. Do not expect to see them post $64 million of income quarter after quarter, because this has a gigantic one-time only item in it that's bigger than the entire net income for the whole quarter. Very quietly, and they did not put out a press release, although obviously they had to file this with the SEC. On October 24th, they did a new shelf offering. Their previous shelf offering is complete. Remember, they just diluted their shares by over $300 million with this debt conversion. Now, on October 24th, they're doing a $750 million shelf offering. So this does not mean they're selling $750 million of stock on October 24th. They may or may not even use all of this, although in the past, they have used every penny of all of the at-the-market offerings. Now, I don't begrudge that. For Bitcoin mining companies, this is a very capital-intensive industry, so as long as they use this to essentially continue to grow their business, I know one of the main things that they've talked about doing is they want to start getting more vertically integrated. They want to do a lot of expansion around the world. So obviously that's going to take a lot of money. But just understand, they did just do a dilution of over $300 million. And now they have a shelf offering of $750 million in addition to that. So there will be a lot more dilution coming for this company. Here's a press release they put out last week as well. Marathon Digital Holdings continues international expansion with 100% renewable powered Bitcoin mining project in Paraguay. It is my opinion that between now and the halving, based on the fact that they are a little bit bearish on the price of Bitcoin, they're testing the waters around the world to see what's going on. This is my opinion. Again, this is not financial advice. This is not management that's saying this. This is my interpretation of the multiple things that they're doing all here at the same time. They've started joint ventures in several different countries on several different continents around the world. To me, that's not a sustainable plan over the course of time. I think they're trying to get an understanding of these different markets, and when they find the right markets, and I think the two that they're in are both going to prove out to be good markets to mine Bitcoin in. They like this joint venture concept. They think that they can leverage themselves by having partners. I do think it's going to be difficult to have multiple partners, like I said, all around the world in several different countries on several different continents. Trying to balance all of those partners, I think, will turn into a problem if that's where they end up going for the majority of what they do. However, in order to test the waters to figure out what's what, this may be a very sound approach, so we'll have to see what happens. More to follow. The other thing that Fred mentioned on the conference call was that they're looking more towards the end of 2024 for their growth. Now, they did mention in their September operational update that they would imminently likely be making an announcement for their next 5 exahash of growth. On the conference call, Fred walked that back and said that they will not be doing that. They don't think people are interested in hearing about large growth plans right now. He's trying to be more strategic, and they will be announcing some of these, and they're looking more at growth in the second half of 2024. I'm paraphrasing, but essentially that's what they said on the conference call. Okay, one last chart that I put together that I think is very important. Right now, based on the most recent financial statements, you're going to see Q3 2023. This is Marathon's cost per Bitcoin by quarter for the last couple of years. So I want to look at this in two different ways. Number one, this number is too high. So I do think this number needs to come down, and I think it is trending down, as you can see, and I think that it will come down over time. But right now, $17,000 per coin in the short term is on the higher end. There are companies that are even higher than this, but there are several companies that are $5,000 or $6,000 lower than this per coin. So Bitcoin at its current price, especially if they're bearish going into the halving, I do think they want to reduce this cost, but you'll see they have reduced the cost every single quarter for the last couple of years, other than this one quarter was a bit of an anomaly. They were down at 15,000, but they've gone from 23,000 to 22,000 to 19,000. Skipping this quarter, they go to 18,800 and now $17,000. So I think even though the difficulty level continues to go up, they are getting some economies of scale. They've also talked about some strategies to potentially underclock machines and manage their power more after the halving. So I think they're going to focus on this, and I think that will continue to get more efficient. So even though this number is too high right now, in my opinion, and it is higher than average, I do think it's trending in the right direction. It's something that's on their radar, and I expect that this is going to continue to improve. I'm just going to quickly go to this chart that I put together. Over the last 17 weeks, which ended last Friday, in the period of time where Bitcoin was up 24%, you can see all of the Bitcoin miners were in the red. I've highlighted Marathon in blue, down 47%. So you can see they're basically on par with their peers from a stock performance standpoint. But like their peers, this has been an absolutely brutal 4 months. Okay, let's finish up by taking a look at Marathon's chart. So like almost all of the other Bitcoiners, Marathon has had a very difficult 16 or 17 week period. From their high on July 14th to where they closed yesterday, so this is updated for this week's activity, they are now down almost 54%. So that's a significant pullback. There's a lot of theories as to why this is happening. Some people think that the halving is being priced in to the Bitcoin miners. You guys can speculate on that. This is not financial advice. I can't tell you why this is happening. I can only tell you it is common among all of the Bitcoin miners, so this is not unusual. It's my opinion that I do think the quality miners are going to have a turnaround and start to catch up to Bitcoin. So I do think a lot of these Bitcoin miners are oversold. I think Marathon is one of them that's oversold. So I don't know that that turnaround is going to start tomorrow. I've tried to get out of the short-term price target game because the Bitcoin miners have been acting very unpredictable from a price standpoint. But I will take a look at a couple of numbers real quickly. If for some reason we have a pullback in Bitcoin, and it looks like we may be due for a little bit of a pullback, Bitcoin has been on a tear. So 15 to 20% pullbacks are fairly typical for Bitcoin. So for Marathon, just to get back to where they were just about a month ago, that would be about a 21% decrease from where they are right now. And that's really the same number that they were at in March of 2023 when Bitcoin was around $25,000. So I don't see Bitcoin getting anywhere near that number. Again, not financial advice. That's my personal opinion. But obviously, there's always some downside. On the flip side, if Marathon could get all the way back to where it was in July, that would be about a 116% increase in the price of Marathon stock. So is that possible between now and the halving? I think it depends largely on how Bitcoin does, whether or not an ETF is approved. There's a lot of factors going on here, but I do think this is on the table. So this is one potential price target. And obviously for me, I'm a longer term investor. So, you guys got to do your own due diligence and make your own buying decisions based on your risk tolerance, based on your time frame on how long you're looking to hold these stocks. The Bitcoin miners that succeed, in my opinion, are going to do a lot more than go up 100% over the next several years. So again, not financial advice, just my opinion. So depending on whether or not you have conviction in Marathon, there could be an awful lot of room left to the upside. But obviously, like the CEO of Marathon has been talking about about, if we have some bearish activity between now and the halving, we could revisit some lower numbers in Bitcoin and obviously then in the Bitcoin miners as well. So this was an awful lot to go through. Hopefully you guys enjoyed this video. Marathon has a lot going on. I think they have a good future. I think they're doing a lot of good things and moving in the right direction. So invest wisely. Thanks so much for watching. If you made it this far, remember to smash the like button. And if you have not yet, please subscribe to the channel and hit the notification bell so you never miss a video. Thanks again, and we will see you in the next video.